All right, good morning everybody. Welcome to today's live stream. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you all. Hopefully you all are doing well. Hey there, Jay. Good morning, Mark. Hey there, Mohammed. Glad you're tuning in from Vancouver, Canada. Welcome, welcome. Before we get started, if you guys can hear me out there, if you guys can see the video, just let me know in the chat down below just to make sure everything is working, and then we'll go ahead and get started here. Just want to have confirmation of that. Make sure everything is smooth on your guys' end as well as mine. Let's see. Awesome. Okay, perfect. So I'm seeing some people chiming in over on our YouTube page, also over on our Facebook. Thank you for that. Tanish, thank you. Perfect. Thank you there, Jay. Working fine. Awesome. Thank you there, Don. Okay, so welcome everybody. Hopefully you guys are all doing well. If you're not familiar with what we do here, every single Thursday we go live talking about the VectorVest Stock Advisory app. It's one of the most sophisticated trading apps out there to help you manage your portfolio, know when to buy, know when to sell, also help manage your stocks and help with the overall market timing aspect of trading. So we've been around for over 35 years and we've been proven consistent time and time again. And that's why we're here to help you learn how to become financially independent through the use of the stock market, more specifically through the use of the stock advisory app, by teaching you different tips, tricks, different strategies, new features, new functionality, different ways to make sure that you're staying ahead of the game utilizing the VectorVest stock advisory here. So as always, for anybody just tuning in for the very first time, give you guys a little insight on the flow that we like to go through here. So we first start to take a look at what's going on in the market. Then we'll dive into our topic of discussion. And then as always, we finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So with that, let's go ahead, jump right into what's going on here in the market today, because we've got a lot to cover. And then we'll start to identify some ways of helping you understand not only when we should be looking for a bottom in the market, but also how to take advantage of that bottom as well. So looking at it right now, we are 3 ticks into the yellow. Therefore, the market is neutral, and VectorVest advocates caution when buying stocks at this time. If we scroll down just a little bit here, we get to the color guard. Now, the color guard is where we really analyze the overall trend of the market, and we use 3 key components every single day. The first off is the price, or the price of VectorVest Composite. The price of VectorVest Composite is an indexed average of about 8,800 stocks that we track in the US market each and every day. And we feel this gives us a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at, once again, a conglomerate of about 8,800 stocks in the US market. Hey there, Ronita. Hopefully you're doing well. Good morning, Derek. Ty, Craig, Greg, Corey, Julian, Jackie, Lewis. Hopefully you guys are all doing well. Thank you guys for tuning in here today. So after the price, the next indicator we want to focus on is going to be the RT, or the relative timing. Now, the relative timing is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. So above 1 would show the short-term trend is up. Below 1 shows that the short-term trend is down. So at 0.95, we can tell that the short-term trend of the overall market is slightly down currently. No surprise there. We've seen the market been selling off for the last few weeks, so this shouldn't come as any surprise to anybody out there. Then the next indicator that we're going to look at is the BSR, or the buy to sell ratio. The buy to sell ratio looks at the number of buy rated stocks that we have in the database to the number of sell rated stocks. We utilize the number of buys comparing to the number of sells to get an idea on the overall market health. So if there's more stocks with a buy than a sell, then that would show that there's overall market strength. And if there's more stocks with a sell than a buy, that would indicate overall market weakness. So currently we're sitting at a level of 0.76, which indicates that there is overall market weakness still in the market. And then these 3 indicators are comprised to come up with the market timing indicator, or the MTI. The MTI is going to be cast on a scale of 0 to 2 to keep it easy for you out there. And anything above the level of 1 shows the underlying trend of the market is up. Below the level of 1 shows the underlying trend of the market is down. And we'll discuss more about the MTI in just a few moments. After that, we then get the trend column, which shows 2 parts of the trend each and every day. Now, the first part refers to the primary wave, which shows the short-term or simply weekly trend of the market. So as we can see, it's up since the price of VectorVest Composite is higher than it was 5 trading days earlier. The second part is looking at the underlying trend, or just the MTI. So since the MTI is below that level of 1, the underlying trend of the market is down. So therefore, the second part of that trend column does show down currently. And then last but not least, We'll see there, Michael. We'll see what we can find. Last but not least, we then get the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. So we never want to ignore a confirmed call change. As we can see right now, we still remain in that confirmed down situation that we've been in for the last few weeks. All right, so that wraps up the overall market view. As always, we do know that the market is higher. The VectorVest composite or the VectorVest timing gauge is neutral right now. So we do advocate caution when buying stocks. So we want to always look at the advance to declines. And this helps us get an idea on a daily basis on whether or not it's a good time to be buying or not a good time to be buying. So if we see twice as many stocks advancing than declining, that would show that, hey, maybe today's a good day to maybe add a position or two to our portfolio. If we see twice as many stocks declining than advancing, then maybe it's time that, if we need to open up a short position or a contra ETF like we've talked about over the last few weeks, that would be a good day to be doing so. Right now, we're sitting at about 74% of stocks moving higher and about 15% of stocks moving lower, well surpassing that 2 to 1 ratio we typically like to see. Therefore, if we wanted to be aggressive, maybe get in a little earlier, today may be a decent day to do so, since we have almost a 5 to 1 ratio with the advance to declines. So if we scroll down, take a look at the major indices. The Dow's up 1.6%, Nasdaq's up over 1.6%, S&P's up about 1.5%. Overall, the VectorVest composite also up about 1.5% here today. So markets are up big. You have news that the debt ceiling debate is being extended. So you're seeing a lot of buying pressure coming into the market, some positive news coming out of the US. So of course, we're going to see US markets starting to run here. And that's what we're noticing here today. All right. So yes, the markets are up here today. But what do you need to know to be prepared for when to expect that bottom and have an idea of whether or not that bottom's actually in or if we still have more downside risk? Well, the best place to start is looking at the color guard. So if we go back up to the color guard, I talk about this quite a lot, but we're going to focus on this specifically. And then after we go over these indicators and show how to identify when the market's looking for a bottom and when we're at a top, we'll then show you how to really maximize your returns by looking at a technique that's very unique here, only can be found at VectorVest, and that can add a lot of quick gains to your portfolio, especially off of a bottom. So right now, the two key indicators in the color guard that we want to focus on here today is the buy to sell ratio and the MTI. There's a saying here, keep your eye on the MTI. We say it week in and week out, and that still holds true to this day. So there's two levels we always note on the MTI, and that is when the MTI gets to a level of 0.7 to 0.6, that generally shows that the market's starting to look for a bottom. And when we get to those levels of 1.6 or higher, that shows that we're starting to look for a top. Well, if we look here, we see 0.76 is about the lowest we've seen over the last few weeks. We haven't really hit that 0.7 or below level, therefore telling us that there still may be some downside risk in the market and that the bottom may not be officially in. Now, we can confirm that by looking at the buy to sell ratio as well. Dr. Delito calls the buy to sell ratio the canary in the coal mine. And that's because it can show us when the market is oversold and when it's starting to get overbought. So when the buy to sell ratio is at a level of 0.2 or below, that generally shows an oversold condition in the market. And when it gets to a level of 3 to 1 or 3.0 or higher, that generally shows that the market is overbought. Now, as we know with overbought, oversold indicators, they can stay in those levels for quite some time. So the buy to sell ratio is kind of a secondary indicator. The main one we want to focus on is the MTI. Hopefully, if you guys need me to repeat any of that, if you're taking notes, don't hesitate to let me know in the comments or the chat. I'd be glad to repeat that if you guys need it as well. Also, these sessions are recorded, so you can watch the replays after the live session again and again and again over on our Facebook and our YouTube page as well. All right. Michael's asking, would you consider the metrics a blast off day? Any concrete metric that you stick to to be considered a blast off? All right. So we do see some positive moves in the market. That kind of brings us to what we're going to be looking at next there, Michael. So appreciate the transition there. So we know that the market, has definitely had a pullback, but we haven't had a healthy correction yet to get us to those levels that generally show or historically show that the market's oversold. So what we're looking for is whenever the MTI gets to those levels of 0.7 to 0.6, somewhere in that range generally, the first indicator that we'll see to show that the market actually is starting to rebound is a green light in the price column. This is where the green light buyer timing signals originally started from. So what we're looking for now that we've gotten close to those levels tells us we may still have some more downside potential in the market, but the indication that we're going to be looking at to show that we're really starting to see a reversal, or that it's starting to get into that territory that we may want to start slowly trickling back into the market, is that price column right there on the left hand side. As you can see, we've had a lot of red, a lot of yellow. We're looking for that first green light in that price column, which we haven't seen in quite some time. So that is the confirmation that we would like to see to really show that we have a blast off, Michael. Hopefully that answers your question, and that's spot on with what we're going to be looking at next. As we know, we've seen a lot of red, a lot of yellow once again, but really what we're looking for now that we're getting close to those oversold territory, we're not quite there yet. We may still see some more downside coming into the market over the next week or two, maybe even longer, who knows? But at the same time, we want to see if today is a blast off day, we're waiting patiently for that first green light in the price column. If you're really aggressive, maybe speculative, you may jump into it right now. You may add a position or two and just keep some tight stops on them. But if you're really wanting to find that most prudent entry point, then we're waiting for that green light in the price column for confirmation of that. All right, so I see a couple of people asking to repeat those parameters: overbought, oversold. That's fine. So the levels for the MTI, first and foremost, 0.6 to 0.7 generally or historically shows that the market is starting to look for a bottom, and 1.6 and up shows that the market's starting to look for a top. Now on the buy to sell ratio, it is the level of 0.2 or below shows an oversold condition in the market, and a buy to sell ratio reading of 3.0 or higher shows an overbought condition in the market. So essentially 1 to 5 sells to buys, or buys to sells, or 3 to 1 buys to sells on the buy to sell ratio there. Good morning, Charles. Hopefully you're doing well. All right, so any questions on that so far? I just want to make sure we're all clear. We know those conditions now. We know those levels we're looking for on the MTI. That's why we always say keep your eye on the MTI. We're waiting for those conditions. We're patiently preparing ourselves, waiting for those conditions to occur. But if we start to see that first green light in the price column, that would be that confirmation that the bottom has been hit and we're starting to move higher here. Now, we may see some volatility at the bottom, just like we see a lot of volatility at the top. Typically, whenever you see a reversal or a change in direction coming into the market, you tend to experience more volatility. So if that's the case, we may see it fluctuate a lot off the bottom or after that first green light. But just know historically, the odds are in your favor there. And that's really what trading is about, is putting the odds in your favor. Is the color guard available to premium users? Yes. So Julian, everything that you see here is premium. If you notice in the upper left-hand corner, it shows the premium account. So that's one of the things I wanted to do right out of the gate with these streams, is stick strictly with the premium. So everything that you see here is just the premium app. Nothing from the desktop is included with this. Exactly. Bernice, I like that. Exactly. Good morning, Richard. Glad you're here today. All right. So we know the conditions. We know what to look for. We know when to start getting in, when to just be patient, sit on our hands, and wait for the better opportunities. Now, let's talk about how to maximize your returns once we get that green light. Well, there's a a trading methodology that we call bottom fishing here at VectorVest. I've talked about it a lot. I haven't talked about it in a while there, or a while here. And I figured now, after we've seen a slight correction, not what we were expecting, we could still see more, but now we're starting to see a pullback. If we do see the market selling off, this is going to be something that can benefit you time and time again. Now, bottom fishing is not a technique that you want to use when the market just has a bad day or two, like we've seen pretty much all year up until now. Bottom fishing is something you want to use when you have an actual correction in the market. So 10, 20%, something like we saw last March, where we had a sharp sell-off, a steep sell-off. Bottom fishing can be very profitable from those positions, not after just, a couple of down days there. Jay's saying the color guard report is an essential part of the VectorVest platform and one of the most valued parts. Does a great job. Appreciate that, Jay. Glad you guys are enjoying that. And yeah, speaking of the color guard reports, you can find those right here. Those do come with just the premium, also on our desktop subscription as well. You can see that there. And yes, every single night we do a market recap to show you what's going on in the market, what news you need to be aware of, and how to prepare yourself for the next trading day as well. That can all be found in that daily market update. Robbie's saying, up until now, heard that 0.6 or lower was the number for MTI. You're saying 0.7. So Robbie, 0.6, I said 0.7 to 0.6 in that range. Sometimes we can see it drop below that 0.6 range, but realistically over the last few years, from my general observations, we typically don't get below that 0.6 range. We get to that 0.7 to 0.6 range. So that's why I always state that, with the more recent data, with the most recent few years, we generally don't see it get below that 0.6 range before, the buying starts to flood in and we start to see the market really increasing. So anywhere in that range is going to be a good indication to tell you, hey, I may need to start paying closer attention and see what's going on and make sure I don't miss that opportunity there. And if you're looking at a 0.7 to 0.6 range, you're going to be in and you're going to pay attention to it and notice that when it hits that 0.6 or below. So rather be prepared early than not be prepared and get caught off guard. Where it stays, VV Premium on the screen. So Cybertron, in the upper left-hand corner, right underneath the date and time there, you can see it says VV Premium, but right above that it says Premium, right above the US flag there. Appreciate that, Dave. All right, so let's show you how you can find this. The bottom fishing was something that when the Stock Advisory app originally came out, we didn't have any app. It was something that I felt was a very big important aspect of what VectorVest does. So over the years, we've been adding to the bottom fishing techniques and adding different capabilities with it. And so this comes directly, once again, from you guys, some of your feedback here. And I state it most every week, but I do appreciate all the feedback that you guys give, whether it be new features you want to see, new functionality, or just ways things work and the way you want to see them work. Your feedback that you guys give me every single week on these live streams does go directly into the development process that we have here to make the app as best, the most comprehensive trading app available to you. So appreciate any feedback. If you guys ever had feedback, never hesitate to let me know in the chat or in the comments there. All right, so let's get into it. So what we're going to do is we're going to go to the screener here on the left-hand side. We're going to go to Explore Screens and let it load. Did it freeze up on me because I haven't touched it in a while? Let me go ahead, try this one more time. There we go. While I'm waiting for that to load. There we go. Apologize for the delay there, folks. All right. So getting back into it, going into the screener, explore screens. There we go. And then bottom fishing is at the top. It's going to be in alphabetical order. So you'll see bottom fishing close to the very top. Going into it, we have 4 key bottom fishing scans that we've added here over the years. Jailbreak, because that's one of Dr. Delito's personal favorites here, the founder of VectorVest, personal favorite bottom fishing scan or screener, if you will. And it's, very broad, if you will. It's, if you're not worried about, making sure you're in S&P 500 stocks or certain aspects of the market, Jailbreak can give you can be the more aggressive aspect, so it has the potential for higher rewards, but you are going to see a lot more fluctuation, a lot more aggressiveness in that portfolio. But if you're somebody that's, looking for more of the bigger names, we have the S&P 500 divided by RT. And then we have the small caps, once again, for more of that aggressive to speculative trader. And then VST Mighty Mites is going to really be more of that speculative trader just in general. So let's go ahead, take a look at the S&P 600. Actually, let's go to the 500 first. And you can see it gives you the names right at the very top. It brings the best opportunities to the top for you, worst at the bottom. If you want to see the parameters of the scan, you just go to the left. And it tells you the sort, the screen, and what we're looking for. So what we're looking for is stocks with an average price of volume greater than 100,000. S&P 500 stocks, obviously not going to be contra ETFs. And really the power behind this scan is going to be the sort. Really the main purpose or the main power behind any bottom fishing search or screen is going to be the sorting capability. So as you can see, it's looking at RT ascending, bringing the lowest RT ratings of the stocks in the S&P 500 to the very top. You may be asking yourself, why would I buy the stocks with the lowest RT ratings? If I want stocks that are going up, if the RT is below 1, that means they're going down. Well, think about what bottom fishing is. Bottom fishing is looking for the most most beaten down stocks at the bottom of a market. So if they have the lowest RT ratings, those are going to be the most beaten down stocks. So when you're looking for that bottom and you're looking for the stocks to get into, the ones that are beaten down the most have the best potential to really snap back and get back to the overall general average of the basket that they're looking at. For this example, S&P 500. So therefore, this could be a great opportunity to buy some good potential stocks for cheaper than what you're going to find with most other opportunities out there. Mukesh is asking, is the bottom fishing seen only in the premium version? Yes. So this is on, you have to have the screener capabilities. Everything you see here is on the premium version. If you're on the desktop, then you can get even more bottom fishing scans than just these 4. But for the mobile and to have the screener, everything that's shown here is on the premium version. All right. So that breaks it down for the first one, S&P 500. Well, let's go take a look at a more speculative or an aggressive one, looking at VST Mighty Mites. You can see just today alone, look at the stocks that are coming up here. AMPY, the top performer, is up 16.5%. EM up over 6%. CRI up over 2%. All of these are in the green. Let's go take a look at the parameters. And now this sort is going to be a little bit different than what we just looked at. Instead of just using RT in ascending order, this one's going to be a little bit more complex. So what we're looking at is VST, that value, safety, and timing vector that VectorVest uses to analyze every single stock here. And also GPE, standing for the growth to price earnings ratio. Basically just the inverse of the PEG ratio for most people that are familiar with it. So it's looking for the highest combination of those two together and then you see the divided by symbol, RT. So whenever you see that divided by symbol, what you're looking for is the highest number on the left with the lowest number on the right. So you're looking for the highest combination of VST and growth to price earnings ratio with the lowest RTs. So high potential, maximum drawdown to have that snapback factor, if you will. The stocks that are really going to explode off of that bottom are the ones that are the most oversold and a sell-off in the market. You're welcome, Drew. Hey, teach a man to fish, they can feed themselves for life. Give them a fish, they can feed themselves once. So there you go. Loving Extra and FCX today. I see a lot of people talking about Extra today. Extra had some decent news coming out this morning. But once again, I still hold true. I'm going to be talking probably about it in a little bit, but I still hold true to the aspect that if you're in XROF, we need to see numbers. Validation is great. Positive news is great. We've gotten that for the last year and a half, almost 2 years now. We need to start seeing some numbers. Simple as that. Until we start seeing those numbers coming in, those sales data coming in, price is probably going to stay lower than what it should be. I'll leave it at that. All right. So looking at the stocks, though, going back to VST Mighty Mites, you're looking for high VST and GPE and low RT. And we can see a lot of yellow, a lot of green, some red at the very top. Now, if we go take a look at the jailbreak, Dr. Dolito's personal favorite, you're going to see a lot of red on the left-hand side. All of these stocks are sell rated, and that shouldn't be a shock or shouldn't scare you at all. The reason why you're going to see that sell rating is because these are the most the most beaten down stocks in a sell-off in the market. So therefore, yeah, they're going to have that sell rating. Bottom fishing is the only time you'll ever hear VectorVest ever advocate to buy sell rated stocks. I just want to throw that out there to kind of clarify that, because that is one confusion that I get questioned about quite a lot over the years here. So I just wanted to throw that out right now before we even move on from that. Let's take a look at the jailbreak parameters. So this one's using a more simple search with VST divided by RT. All right, now when you see VST divided by RT, what are we looking for the higher number? What are we looking for the lower number? Let's give you guys a second to chime in there. And why we're letting you guys have a second to chime in, if you haven't already, smash that like button over on our Facebook page. Hit that share button in the bottom right-hand corner. If you're over on our YouTube page, make sure to like the video first and foremost. Also, if you're not already subscribed to the YouTube channel, make sure to subscribe to the YouTube channel as well. All right, so time's up. Let's start getting into it. So when looking at the VST divided by RT sort, once again, higher number on the left, lower number on the right. The biggest difference, this is going to basically bring the stocks with the biggest difference between their VST and RT rating there. So stocks with the highest RT, but with the lowest, stocks with the highest VST, but with the lowest RT ratings. So therefore you have a great way for, great systematic approach to find explosive returns here. If we get back into it, take a look at the stocks in it. We can see FBRX. Let's go ahead and take a look at some of these. You can see the fundamentals are not going to be great. Once again, this is more of that speculative play. This is going to be more volatile. Expect that. If you don't want volatility, we have other options available. Let's go ahead and take a look. So you see a big gap down all the way from about $30 to about $2. Maybe skip that one. TAL, due to China. Well, if China rebounds, if the overall market rebounds, if you have less people worried about what's going on in the US, China happens to fix all the potential real estate developers that are defaulting right now, or they just buy them up and just make them state-run companies, that solves that issue. China stocks start moving higher again. Were these stocks in the list last night ready to buy today? So Robert, I definitely recommend go back, watch the beginning where we talked about, when is that prime opportunity to buy, because right now we're not quite there yet. But once we do, that's the day you want to go in and you want to run one of these and then pull your stocks from there. All right, so TAL, ADRX or ARDX, EAR. So stocks that have really been beaten down and seem to accelerate through that downturn that we've recently seen. We go to the S&P 500. Go back and take a look at some of those. So mRNA, I know let me turn that off real quick while I'm talking. I know a lot of people, have been very bullish on mRNA. It's been one of the most hot stocks in the market over the last year and a half now, I guess at this point. And they still seem to have a lot of potential. You've had a pretty big sell-off after some news. It seems to be a lot of people buying the rumor, selling the news kind of situation. But the market starts turning back around. Definitely expect to see mRNA get a nice rebound from off of those lows. IPGP, been pulling back. especially over the last few weeks. You're seeing an accelerated downturn. Therefore, these stocks would have that nice rebound once the market starts moving higher. LW coming back nicely today alone. FedEx, same situation. So you're finding a lot of names that you're probably familiar with that have really seen an accelerated pickup in the selling, that when the market hits that bottom, we start to move higher, you could expect just the opposite to come in, and we could see a nice rebound off of those lows. At the top of the list, exactly. All right, so that's going to do it for that. If you guys have any questions regarding bottom fishing in general, please let me know. If you guys have any questions about those levels we talked about earlier, let me know. Also, on top of that, let's go ahead and start to analyze the stocks that you guys are interested in as well. As always, this is a fan favorite. You guys like seeing your own stocks analyzed, so we'll go ahead and analyze any stock and show you how you can do so in less than 10 seconds. All right. So Robert, the screener that you saw there updates throughout the market. It's streaming constantly. It's updated constantly, just on a 15-minute delay. So that's why you want to run it on the day that you have that first green light, or the MTI showing that we're in oversold territory, that the homepage telling it's time to rebuy or time to buy. All right. Okay, so EDU coming up, the very first one. Hey there, Marcus. Glad to see you. Haven't seen you in a while. Hopefully you're doing well. All right, so EDU. What we're looking at first and foremost, to make sure everybody's on the same page, we have these 4 indicators at the bottom. All of them are going to be cast on a scale of 0 to 2. VectorVest is here to make your life easier, not harder. So if you can remember, above 1 is good, below 1 is bad. That's as hard as you need to make your investing. So the first one we come to is RV, or relative value. The relative value is looking at the long-term, or over the next 1 to 3 years, price appreciation potential. So at 1.4, it tells us the stock still has good long-term price appreciation potential. The next indicator we look at is RS, or relative safety. This is essentially the risk factor. Below 1 tells us there is more risk. Above 1 would show us that there is less risk. At 0.83, that definitely shows us there is more risk involved with this stock. The next one is RT, or relative timing. Once again, relative timing is looking at the short-term price trend of the overall market. At 0.13, that tells us the short-term trend of this stock, or excuse me, not the overall market, but the specific equity we're looking at. At 0.13, that tells us this stock is in a severe, strong downtrend. So overall, the stock is not favorable when you look at the VST rating there. All right, let's see. DCBO. So DCBO, poor long-term potential, does have a lot of risk associated with it. You are basically flat on a short-term basis. Therefore, the stock is not favorable currently. Apps a PPS. Go ahead and move this over a little bit. Kind of hard to see it where it's angled. All right. So this one, good long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock's definitely favorable here. Let's see, ADBE. ADBE, great long-term potential, less risk associated with it. However, timing is of the essence. Timing at 0.82 tells us it is in a steady decline. Therefore, the stock is a good stock, just not the right time to be in it. As I mention every single week, once you actually own a stock, the most important indicator out of these 4 that you need to focus on is the relative timing. Because the relative timing tells you whether or not the stock is making you money or losing you money. If the RT is below 1, that tells us the stock is not making us money. Therefore, it doesn't make sense to hold on to a stock that's losing us money. Good stock, just not the right time to be long in it. All right. Let's see. SUN, great long-term potential, but does come with additional risk. You have a steady, consistent uptrend right now, so therefore it's definitely favorable. PDD. There we go. PDD is a speculative play. Poor long-term potential, a lot of risk. It's in a slight uptrend, but not enough to really offset the amount of risk involved with it. Therefore, not favorable. LSPD. Poor long-term potential, a little bit more risk than the average stock out there. It is in a steady decline. Therefore, the stock is not favorable. That's really as hard as we need to make analyzing any stock. You don't have to spend hours upon hours going through pages of data or pages of reports to try to analyze a stock. VectorVest takes all of that data out there that you would have to try to analyze on your own and puts it in a systematic formula to make it easier to understand and easier to get the answers that you're looking for. Let's see. PDD, did that one BLDR? There we go. BLDR. Great long-term potential, less risk associated with it. You're in a really nice, strong uptrend. Overall, stock's definitely favorable here. Mark, wrong segment here today, Mark. Mug, maybe one day. Maybe I can get that one day, but that's something that Glenn started. I don't want to steal his thunder there. All right. MTDR, great long-term potential, about average risk associated with it. You're in a really strong short-term uptrend, so overall, stock's definitely favorable here. Let's see. AAPL, great long-term potential, less risk associated with it. Even with the pullback, it's still slightly up overall on a short-term basis. Therefore, the stock is definitely favorable. I know, it's been risky, but it's been not a great few days seeing Apple pulling back, but with the fundamentals there, great opportunity. One thing I will say though, since we're getting below that level of 1.1 on the RT, pay closer attention to it. Obviously, you don't want to hold on to it if it has another long-term decline like we've seen in years prior, but at 1.04, it is still in a slight uptrend. If it breaks below that, time to, reevaluate the position or make sure you're at least protecting some of those profits there. All right. AMAT, great long-term potential, less risk associated with it. You're pretty much flat on a short-term basis. Overall, good stock. Timing, maybe not the best right now. HUTS or HUT. HUT, great long-term potential, but does have a little bit more risk associated with that long-term potential. Really strong short-term uptrend, even with the down day here today. Overall, good stock. NTR, great long-term potential, more risk associated with it. You are in a steady uptrend, so overall, stock's definitely favorable here. PHBI. Not finding that one there, Craig. BA. So BA has poor long-term potential, a little bit more risk than the average stock out there. Basically flat on a short-term basis. Stock's not favorable. Nothing really stands out as something worthwhile here. PPBT. There we go. PPBT. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock's not favorable. WYS. Poor long-term potential. You're a lot of risk associated with, or a little bit more risk associated with it. You're in a slight decline. Overall, stock's not favorable here. Lucid, LCID. LCID. A lot of risk. Poor long-term potential. You do have a slight uptrend, but not enough short-term momentum to offset the amount of risk involved with it. Therefore, not favorable. Ally, ALLY. ALLY. There we go. Moved my fingers a little bit too fast for that one. Okay, so good long-term potential, less risk associated with it, steady uptrend. Overall, definitely favorable here. MRVL. Average long-term potential, less risk associated with it though, so more of a conservative play. Really nice, strong uptrend. Overall, definitely favorable. MU, good long-term potential, less risk associated with it. However, timing is of the essence. Timing at 0.92 tells us it is in a steady decline. Therefore, good stock, not the right time to be long in it. Mara, MARA. Great long-term potential, but does have a little bit more risk associated with it. No surprise there. You have a really strong short-term uptrend. So overall, stock's definitely favorable. AMD, good long-term potential, less risk associated with it, strong uptrend, overall definitely favorable. CMGI, let's go ahead, CMGI. Oh, not finding that symbol there for CMGI. Sorry about that, Lindsay. Let's see what else we have. GD. So GD, you have average long-term potential, less risk associated with it, so more of that conservative play. Timing at 1.04, it is in a slight uptrend, but not really a strong uptrend. Overall, stock's favorable, but not by much. ZS, we'll do a few more here as well. So ZS have poor long-term potential, a lot of risk associated with it, a slight uptrend. Overall, stock's about average. FDX, great long-term potential, but does have a little bit more risk associated with it. You're in a steady decline. Good stock because of the long-term potential, but not the right time to be in it. EXPI, great long-term potential, less risk associated with it, and a steady uptrend. Overall, still favorable here. Let's see what we have. ARCH. So ARCH, good long-term potential, but does have a lot of risk associated with it. You're in a really strong short-term uptrend currently. Overall, stock's favorable. SQ, good long-term potential, less risk associated with it. However, not the right time to be long in it. Overall, good stock, just the wrong time. TSM, good long-term potential, less risk associated with it. However, the timing is not the right time to be long in it. Good stock, timing is off. PLTR, and we'll do one more after this one. PLTR, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, not favorable. And then, last but not least, AEHR, poor long-term potential, a little bit more or less risk associated with it than the average stock out there. Timing is crushing it right now. 1.86 is pretty close to that maximum you can get of 2.0. So really, really strong momentum play currently. Overall, good play. But only for people who are, willing to take that additional risk and are looking for more of a momentum play here. Thank you for that feedback, Mark. I appreciate that. Glad you're here with us today. All right, last but not least, Lindsay finally updated it. So let's go ahead and put that one in. GMGI. Not finding that one either there, Lindsay. All right, BTBT. Also, if I failed to get to your symbol here today, I do apologize. As always, if you are somebody who uses a stock advisory app, all you have to do is pull it up, tap on that little magnifying glass in the upper right-hand corner, type in your symbol, and you can do the same analysis we're doing here on any stock, anywhere you're at, as long as you have a cell phone connection or a Wi-Fi connection. If you're not already subscribed or not already using the stock advisory app and you want to do this analysis on your own, click on the link down in the description of today's video. You can sign up for a 2-week free trial and put it to the test there. All right, so let's go ahead, take a look at BTBT. So BTBT, average long-term potential, but does have a lot of risk. You're basically flat on a sideways, or basically moving sideways on a short-term basis. So overall, stock is not favorable here. All right, so that's going to do it. Let's go ahead and wrap things up. So today we're still 3 ticks into the yellow, no surprise there. If we look down here at the color guard, we had 3 red lights across the board as of a week ago. So therefore the best we're going to be hoping for is 3 yellow lights across the board here today. Main focus is going to be that first part of the trend column, that primary wave. Primary wave is probably the most aggressive timing that we have here. And the fact that we're seeing that turn to up today could give aggressive traders out there an opportunity to potentially add to their portfolio like we talked about earlier. Going down here, still at almost a 5-to-1 ratio of advances to declines. So therefore the bulls are definitely outpacing the bears. Unless something drastic happens here today, which I don't know what that could be, but if something does, that may change. But for right now, things are looking pretty strong to the upside. Taking a look at the major indices, the Dow is now up about 1.5%. NASDAQ's up about 1.6, S&P's up 1.4, overall VectorVest composite up about 1.5. So overall, we're seeing the markets or the major indices slightly pulling back a little bit. Not by much though, just slight pullbacks here off of those fresh highs. But overall, the advance to decline still shows a lot of strength in the markets. So if you've enjoyed today's analysis, if you've learned something today, if you haven't already, hit that like button, hit that share button, share this out with all your friends, all your family. Let's continue to grow this awesome community that we built over the last few years and teach everybody out there that there are more ways to make money than just your standard 9-to-5 job, and that you can become financially independent through the use of the stock market and be your own boss rather than having to, do the daily grind, if you will. So on that note, I hope you all have a great rest of your day. Thank you all for tuning in here today. And we will be live next Thursday at 11 a.m. Eastern, right on our Facebook page and over on YouTube as well. So until next time, take care, adios, and toodles.